Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HIMS and HERS Health Inc. quarterly report. HIMS and HERS Health Inc. provides a wide range of businesses and services, including telehealth platform connecting consumers to licensed healthcare professionals, curated prescription and non-prescription health and wellness products available for purchase online or through mobile app prescription medication, on a recurring basis ongoing care from healthcare providers over-the-counter drug and device products, cosmetics and supplement products, medical consultation services, post-consultation support services, health and wellness products through wholesale partners, the companies. Product offerings are categorized into four main specialties: general wellness, sexual health and wellness, skincare and hair care. The HIMS and HERS Health, Inc. HIMS stock price has skyrocketed by over 130% in the past year due to a combination of strong financial performance, strategic developments, and favorable market activities. Key drivers include robust quarterly results, expansion into weight loss management and AI-based medical services, strategic acquisitions, share repurchase programs, growing subscriber base, talks with Novo Nordisk for Wegovy distribution, and positive analyst sentiment. The company's move into weight loss management, including GLP-1 offerings, has been a significant catalyst. The integration of AI-based medical services and the planned Canadian launch of generic semaglutide have also contributed to the surge in stock price. Additionally, strategic acquisitions, such as the acquisition of an FDA-registered 503(b) facility, have enhanced its supply chain capabilities. The growing subscriber base, with over 1.9 million subscribers by Q2 2024, and talks with Novo Nordisk for Wegovy distribution have further fueled investor confidence. Favorable legal developments, including the dismissal of a lawsuit against Eli Lilly, have also reduced perceived risk for HIMS and HERS business. Overall, the confluence of these positive news and strategic developments has driven the substantial increase in HIMS stock price, making it an attractive investment opportunity for analysts and investors alike. The primary drivers of revenue growth or decline can be categorized into several key areas: market and regulatory factors, such as changes in healthcare reform laws and regulations, compliance with FDA regulations, and introduction of new products or services, play a significant role. Compliance and regulatory risks, including industry standards and regulations, data protection, and anti-bribery laws, also impact revenue growth. Operational and financial factors, such as increased costs due to business expansion and higher expenses from operating as a public company, can either drive revenue growth or lead to decline. External economic factors, including changes in interest rates, disruptions in global financial markets, and economic downturns, can also significantly affect revenue growth. In summary, the primary drivers of revenue growth or decline are market and regulatory factors, compliance and regulatory risks, operational and financial factors, and external economic factors. Net income and profit margins. A shift in trends. The financial summary reveals a mixed bag for net income and profit margins. For the 3 months ended September 30, 2025, net income increased by $15,774, but this growth was not sustained over the 9-month period, where it actually decreased to $107,764 compared to $100,013 in 2024. Profit margins also experienced a decline. The gross profit margin dropped from 79% in 2024 to 74% in 2025 for the 3 months ended September 30, and from 81% to 75% over the 9-month period. This downward trend can be attributed to increased general and administrative expenses, including stock-based compensation, employee compensation, professional services, depreciation, amortization, and technology costs. The decrease in total other income, net due to a loss from change in fair value of liabilities, also contributed to the decline in profit margins. These changes indicate that while there was some short-term growth in net income, the company's overall financial performance has been impacted by rising expenses and decreased revenue streams. The company's financial performance indicates a strong ability to generate cash from its core operations. With a net cash provided by operating activities of $238,694,000 in 2025, the company is successfully converting profits into cash flow. This positive trend suggests that the business is financially stable and capable of meeting its obligations, positioning it for future growth and success. The company's debt level has undergone significant changes over the past year. Initially, there was no debt on December 31, 2024. However, by September 30, 2025, the debt had increased to $971,023 due to the issuance of convertible senior notes. Furthermore, the principal amount of the 2030 convertible notes stood at $1 billion as of September 30, 2025. Consequently, interest expenses have also seen a substantial increase. The amortization of debt discount and issuance costs rose from $0 in 2024 to $2,790 in 2025. Moreover, interest expenses have increased significantly in both the 3-month and 9-month periods, with the rise being more pronounced in the latter period. In summary, the company's debt level has risen substantially, leading to a substantial increase in interest expenses. The company's financial summary reveals a strong domestic presence in the United States, where its subscription-based prescription products and services generated significant revenue. In contrast, international markets, including key regions such as the UK and EU, show unclear performance. Overall, there is no indication of poorly performing segments or regions. Management is expressing caution about the company's outlook due to various risks and challenges. Key concerns include regulatory changes, increasing compliance costs, intellectual property protection, security breaches, litigation risks, and difficulty accessing capital in a potential economic downturn. Despite these challenges, management remains committed to supporting business growth and expanding into new markets. The company has made significant acquisitions to expand its portfolio, including the CS Bioco asset acquisition and the Zava business combination. Notably, a digital health platform, Zava Global GmbH, was acquired in July 2025 for $258 million. These strategic moves demonstrate the company's commitment to growth through targeted investments. The company's financial summary reveals that it has taken 2 notable actions in recent years. Firstly, the company has chosen not to pay dividends to its shareholders, indicating a focus on reinvesting profits within the business rather than distributing them to investors. Secondly, the company has engaged in share buybacks, purchasing back shares from the market to reduce the total number of outstanding shares and potentially boost earnings per share for remaining shareholders. Concerns about inventory buildup and supply chain disruption are present in the company's financial summary. Inventory has increased by $40.1 million in 2025 and $26.3 million in 2024, attributed to investments for customer demand and business growth. Additionally, expansion into new health and wellness specialties may require purchasing new inventory. Supply chain constraints related to the company's offerings are a concern, page 40. Tariffs, economic sanctions, and trade restrictions are also impacting supply chains, page 67. Furthermore, potential disruptions from catastrophic events, climate-related disasters, or acts of war/terrorism could impact fulfillment and distribution delays, page 86. These concerns highlight the need for the company to address inventory buildup and mitigate potential supply chain disruptions. That concludes the financial summary for HIMS and HERS Health Inc. Feel free to comment below, and I will be happy to answer them when possible.